Before we talk about the impact of these tariffs on the region, because the GCC region hasn't been spared, maybe let's just talk about the price action in oil today. Why do we think oil is down almost 3% in trading, or 2% now?
So it's about the biggest drop in a month, but it is only marginally one standard deviation away from the norm. So that's the context. But I think what you want to be looking at is the forward curve, because that's been backwardated now for months and months and months. That reflects concern about near-term supply. If you start to see that change, if you start to see it move into contango, then I think that's where the big readout is going to be. 2 or 3 big factors take into account. Number one, maximum pressure on Iran. Number 2, OPEC is coming back with more supply. It's a small amount, it's 138,000 barrels, but remember, they were pushing, they're finally doing it. Great timing, as always. And then number 3, can China stimulate enough to keep that demand up? So really look at that forward curve, I think, as an indicator of where we're going forward.
Can I just ask you about OPEC? Because let's just remind viewers that they've been talking about putting all these barrels back to market.
Yeah.
They finally announced it. This month, they are slated to bring back something like 130,000 barrels per day. Oil is sitting at $70 now. Is there any oil price level where they will say, actually, we think we're going to hold back and not bring these extra barrels back to market?
Yeah, so I mean, it depends what you mean by they. So let's start with all the countries that have been cheating on their quotas for months and months and months.
Right.
And then right at the other end of the scale, you've got Saudi Arabia that's basically been carrying the weight for most of the rest of them. And I think is probably somewhat fed up with it. There's a call later today, apparently, where they're going to reiterate if everyone could stick to their quotas, that would be jolly useful. So what exactly is the price at which Saudi Arabia gets worried? I mean, remember, the pressure there for Saudi Arabia is not so much its margins. It's producing at $8 a barrel or thereabouts. It's this massive spending program. Yeah, and the break-even for them is somewhere between $90 and $110 a barrel or thereabouts. That's our BE estimate on that, anyway.
Yeah. So bigger deficits potentially, and then also let's also remind viewers that Aramco dividend, which is also important for the Saudi budget revenue, is going to be smaller. Let's just talk about the potential economic impact to the region on back of the tariffs. Again, a bit of a shock, because if you look at the tariff rate that are applied by countries like the UAE and Saudi on U.S. goods, it's very small. In some cases, there are no tariff rates. So this is probably coming as a bit of a shock that now their goods are going to be applied at a tariff rate of around 10%. What sort of economic impact is that going to have on the region?
I mean, I think in terms of direct trade, it's going to be pretty minimal. So they buy a lot of weapons from the US, that's for sure, a lot of services as well. I doubt you see too much impact there. Really, the impact, again, is the global one. They are highly dependent on the global economy chugging forward. That is looking increasingly at risk, I would say. I mean, I think you mentioned earlier 50% chance of recession. That feels about the right ballpark. So that's what's going to impact them. They have to maintain those dollar pegs. Again, that's not an easy thing to do in this environment where FX is moving around all over the place. So that's the thing to focus on. In terms of direct sales by the GCC to the US, it's pretty minimal. They haven't been big oil suppliers to the US for a very long time.